Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current. Mark, happy Friday. We're back to the end of the week and the start of Digital Currents. How was this last week for you?
No, happy Friday. It's actually a beautiful Bitcoin Friday. It's finally, forget the dog days of summer. It's finally cool enough down here in North Carolina to wear long pants again. So I actually do have the Bitcoin orange pants, and I have the Bitcoin roller coaster sock game. Well, why the Bitcoin roller coaster? Because it's summer, and you do roller coasters in the summer, but also in the last month, since July 10th, we've basically been at the same place. We've had some highs and some lows, but we're in this, because a roller coaster, right? You go up and then you come down and then you go up, but you end up in the same place. But the enthusiasm for me is coming from, I think we're about to enter the lock-in track, right? Where you lock in, you're going up the big hill, and I think we're going to see that come the fall, because I'm wearing a little bit of maize for you for football season coming up, and in fact, I got a lot of, like our partner Sachin would say, I'm wearing Florida colors with the orange and blue, his Gators. But I guess I need to wear the darker blue for my Irish. But and now some would say, but wait a minute, Mark, you just said that it goes up and goes down, and if it's a roller coaster. Well, what if we go in this big track, between now and October, November? Then what? Well, yeah, then I actually think we're due for another bear market. Now, interesting, Saylor this week abolished winter. He said winter is not coming back, that, he basically decreed that the 4-year cycle is over. Yeah, he's a smart guy. I'm taking the other side of that. I've been talking about this really since January, and I said it would be unpopular. Everybody wants the 4-year cycle to be eradicated. Everybody wants to believe that the ETFs and the institutional demand have eradicated the, humans are going to human.
Especially Saylor, he's got a little bit of self-interest there, would you say? Yeah. But I think, it's the point of a self-fulfilling prophecy. And I think, there's the old adage, Mark, that we always get caught up in finance and saying, but this time is different, right? Same set of circumstances, different outcome, potentially.
Or most dangerous words in investing.
Do not say that, but we will try and explain how this time could be different. And a lot of the points, Mark, that we said during the halving, if folks remember that episode, that was a great set of episodes we did right at that time, which is explaining, why you didn't have this meteoric like jump that you would expect to see, right? And some of that was already getting priced in. And in particular, it was this accumulation pattern, which had been happening. And we didn't really see that surge until another set of macro circumstances in the inauguration, which happened, many months later. The Maxis would say, well, regardless of who comes into power, there always is a bit of a jump during, a new administration. And we recognize that as well. At Morgan Creek, we will pat ourselves in the back, Mark, because we bought right in that moment a little bit more, but recognizing that, hey, there was some value here and they could accrue. We didn't expect the wave of Bitcoin favorable policy to follow. I don't think anybody really could have honestly expected that in such a short amount of time. So it's kind of those ideas, behind maybe Saylor's, let's call it, dream or decree that there is more.
Yeah. He's speaking it into existence. And look, to your point, the set of policy and regulatory changes have been universally positive, but there have been some absent. I mean, I actually, my dad asked me last night. He said we were having dinner, and he said, so when's the reserve going to get passed?
Oh,
I, I don't think it is actually. And, you don't hear Senator Lummis talking about it every day anymore. You don't, it's kind of, and it's kind of weird, right? We got the Genius Act, and we did a great episode on the Genius Act and all the good things. And, then they put the Clarity Act kind of on hold. And then this other bill is just vanished. I mean, and maybe it's stuck in committee. If you remember the "I'm Just a Bill" song from Schoolhouse Rock.
how could I not?
I'm stuck in committee. And I don't know. But generally speaking, lots of policy has been positive. And I think that is accretive and turns a headwind into a tailwind. I'm not convinced we're through the "then they fight you" phase. I think Jamie Dimon's still got a few tricks up his sleeve to try to slow this thing down. But the one thing that did happen this week, you said, it was a good week. It was a great week, particularly because, the executive order. Now, when Trump can't get something through normal channels, he reaches for the executive order pen. And the executive order, it's not as powerful as people think. And there's a lot of, like the first one, when they say, he issued an executive order to establish a reserve. Well, no, he issued an executive order to explore a reserve. He empowered people to explore and created a digital asset stockpile, which just says, well, we already have some, so don't sell it. We'll just call it this. But he didn't establish it. So there are certain things you can and can't do with the executive order. But what was announced was that he's going to create an executive order, and that's going to allow crypto and private and some other things, real estate, in 401ks. Now, I actually am not clear whether that can be achieved by executive order or whether it needs congressional action. My gut says it needs congressional action, but we'll see. And generally speaking, I think it's coming. I think they will relax the restrictions. Look, I've said this for years, right? Right now, it's against the law to own real estate, private investments, venture capital, digital assets, commodities in your 401k. And all those things I think are good. So I do think it's coming. Like I said, I don't know for certain whether this executive order can mandate the change. I feel like it needs to be like the Tax Act of 86, which again had nothing to do with taxes. It had a little to do with taxes, but it was really about converting from defined benefit to defined contribution and the 401k that we know today. And, again, we think it was this great gift to us and portability, but it really was as a way for corporations to give us less, right? They had to put a lot more in a defined benefit because they had to actually pay for our benefits. With defined contribution, they can give us some, and then they can create this mythological number that is going to compound at, even though the average 401k never compounds at that number. And that's why the average 401k is so small. And then you got the risk of market volatility causing 401ks to turn into 201ks and 101ks, which has happened multiple times. But anyway, I'm happy that we got the executive order, but I don't know that we're done yet.
Yeah, I think that's kind of a good place to pick it up, Mark, because there's so much there in that. I think that, for the first time, Mark, you can go on whitehouse.gov and read a comprehensive outline of what might be foundational policy for crypto, which is pretty land-breaking, right? And so it's, 166-page policy report released last week. And it's part of this, group that is, part of, the room where it happened, right? So you've got the David Sachs of the world, Scott Bessent, and some of these other folks, beyond the president that are kind of advising this group on what they call a hallmark of a new American golden age. And, it's these ideas to how to create digital assets and blockchain that can revolutionize. And it's very myopic here, Mark, so bear with me. Not just the American financial system, but the systems of ownership and governance economy-wide. And there was an interesting quote, if you kind of dig into the report and thinking about, how some of these ideas play out. Going back to the episode that we recorded on the Genius Act, we were talking about, well, that's as much crypto as it is strengthening dollar hegemony. And right there on whitehouse.gov, there is in bold, strengthening the role of the U.S. dollar. The widespread adoption of dollar-backed stablecoins will modernize payment infrastructure and allow the U.S. to move away from costly and outdated legal systems. I mean, there it is, Mark. In black and white.
Look, it's nice to see it, like I say, in black and white. It's super nice to see kind of this recognition that this is not, magic internet money. It's not some mythological thing. What we have is a technological evolution. It's not even a revolution. It's an evolution of technology that I've said it many, many times in the past that, the internet, which was feared and reviled and fought against because it displaced incumbents in two very large industries, media and commerce. If you controlled media and, like a newspaper or radio station or television station, and you got to decide when you disseminated information and what information got disseminated, and there was this open-ended, universal 24/7 machine with all of the knowledge of human history, right? And it's in your palm, this thing called the internet. It's like, well, I don't want that. I don't want that. I can't control that. Well, yeah. It's like when Bill Gates was on the David Letterman show saying, no, you don't want the internet. You want the Microsoft intranet. Hell to the no. No, we don't. So that disintermediation of media and ultimately commerce, when you wanted something in the olden days, you went to the store and maybe they had it, maybe they didn't, and you could have them order it for you. It took time. And now you punch a button and it shows up on your front porch, sometimes even within a couple hours. That disintermediation was because of this technological evolution from generic computing to functional software. And now we're in this next iteration, which is what a blockchain does is it organizes and stores data in a way that revolutionizes or evolutionizes, I guess, financial services. Financial services is the largest industry in the world, and it's not close, right? And it governs, to your point, governs ownership, right? The right to something, take money, right? We all think we have money and we put it in the bank, and we don't ever stop to think, well, wait a minute, why did I give my money to the bank? Because now it's the bank's money, and they might give it back to me, and most of the time they do. But technically, and actually, the ownership, because of this large morass of government systems, says it's actually theirs. And if you read the fine print, which no one does, right? They don't have to give it to you when you ask for it. They don't have to allow you to use it for the things that you want to use it for. They can ask you questions like I've talked about where I'm like, okay, I want to transfer some money. Like, to what? Well, it's none of your business. I mean, literally, it's none of your business. Like, well, yeah, it is. And if you don't tell me, then I'm not going to do it. So, and then the New York Times prints the article that, having a bank account is not a fundamental right.
Yeah.
Like, whoa, time out. So we can fix that. Blockchains fix that. If I own an asset on blockchain, I don't need the bank's permission. I don't need the government's position. I don't need anyone's permission to move it to you or to my, my son or anybody else. I mean, my son came in today, and so I had a call this morning, so he had to walk home from cross-country practice. He's like, I demand compensation. They're like, well, no. I mean, it's good for you to get a little exercise.
Or extra practice, from
extra practice. But if I did want to compensate him, I can, punch a couple buttons. I don't need to ask the bank's permission to say, should I be allowed to give some of my money to my son? And that's a better system. And so we're on the precipice of truly landmark evolution in, as you said very correctly, governance of value dissemination and control. And that's a really cool place to be, as long as you're not dependent on the rents of the old system. If you happen to be dependent on the rents of the old system, bank, broker, insurance company, custody agent, you don't like it very much because, I just use a simple example, stablecoin, right? If I, sitting on my couch in my pajamas on Sunday morning and I want to buy something, if I want to use fiat, I got to wait for the bank to open, or I got to use a credit card and pay somebody 3%. With a stablecoin, I can do it instantaneously, basically for free. I mean, it's not quite free, but it's, essentially free. And that's just a better system. And will it always be hegemonically backed by dollars? Probably not. But in the short run, this is certainly a way for the U.S. to solve one of their greatest problems: who's going to buy all the debt?
Right. And then maybe to your point, Mark, I want to get your thoughts on this because, it is pretty provocative quote by the New York Times, kind of denying the fundamental right to a bank account, when one of the fundamental rights in the Declaration of Independence is the right to liberty, right? And so I don't see a way that you can have liberty without a bank account. But in kind of this big reversal of one administration to the next, in particular on the SEC side, where Paul Atkins says he believes deeply in the right of self-custody, which is basically a digital wallet, right? And kind of laying out the ways that we can create clarity to kind of make that happen. This is also in an attempt to repatriate a lot of what has been lost under, the last couple of years of U.S. companies fleeing, ultimately, persecution, witch hunts, by different members of government bodies. Not to single anybody out, there was a sweeping, crackdown that happened at all levels. But now, the idea that this is really potentially, Mark, a fundamental right to self-custody, it is a new mechanism, in my opinion, for liberty without sounding too myopic. I think there is no way for freedom. There is no way for pursuing happiness if you can, at a minimum, put a roof over your head. And it's getting increasingly harder to do that if that,
oh my gosh,
costs more and more each day, right?
No, look, there's someone did an AI of the Jekyll Island meeting, right, where they came together to form the Federal Reserve. And it's basically them telling you all the things that they would never tell you, that, yeah, we're not doing this for you. We're doing this for us. We're trying to make ourselves richer. We want to be in control. We want you to be debt slaves to us by us controlling the fiat. And it's very well done, and it's funny, but it's so true in the sense that, look, if a group of people can create an institution to issue money, right? And they call it the Federal Reserve, even though it's not federal, or it's not part of the government, and it's not a reserve in the sense it doesn't, unlike a bank, which has deposits, there's nothing there. So what is it? Well, it's a mechanism for stealing wealth, right, through the process of inflation, which they propagandize to make us believe it's good for us somehow. And I say, like, how is it that something that's engineered to take half my purchasing power every generation a good thing? I mean, there's just on no planet is that good. So but we've been propagandized to believe that somehow these guys have our and it's guys, right? There was a bunch of old men, and they did it. And so now we have this liberating, because I love the liberty word as well. We have this liberating technology that allows us to fight back. And I keep going back all the time to, and again, I could never really understand this because I'm not that, right? I mean, what I mean is Wences Casares grew up in Argentina, and he watched, and he speaks passionately about this, he watched his family lose everything 3 times, right? They built up a fortune. The government took it away by devaluing the currency. They built the fortune back up. The government took it away. And so when he saw Bitcoin, he's like, I can now control, and they can't take it away. They can't devalue it because 1 Bitcoin is always 1 Bitcoin. It's like literally an ounce of gold. Now, they can try to confiscate it. And with gold, they can literally come to your house and try to take it out of the vault. Bitcoin is a little tougher. Now, they could torture you until you gave up your seed phrase, but I don't think they're going to do that. But I mean, certainly could. But I think the difference here is when you have this shift in mindset that, wait, I don't have to be controlled by this fiat control mechanism. That is a very liberating thing. And that's why people who don't spend any time thinking about what is this technology, what is blockchain technology, what is Bitcoin, and a lot of people on the internet say study Bitcoin. Like, that's actually really good advice. I mean, doing the work to understand, you will, I believe, anyone who does any amount of work will have that aha moment. You had it, I had it, everyone we kind of respect in the industry has had it. And we all come about it different ways, but you have it when you see that fundamental understanding of, wait a minute, this is a better way to own things, right? Read, write, own. So analog is fine. Bare assets, we got to meet, we got to exchange our chickens and our cows. And then electronic is better because we can leave the chickens and cows at home. We can trade, stock certificates with QSIPs. But digital is better because a consensus controls the decision making, not some single person. There's actually this amazing video. It's only about 3 minutes, and it's basically a cartoon of 2 little kids talking to Satoshi, mythical Satoshi, about why he created it and what is money, and everyone needs to see this. I mean, we should post it in the show notes. It is an unbelievable 3 minutes, and it's literally perfect. And it's not a big investment of time, right? I mean, but once you watch that, I mean, my 14-year-old's like, he has the aha moment. Anyone can have the aha moment. Maybe not a 5 or 6-year-old, but it goes all the way. It's pretty simplistic.
Right. And I think, as we kind of think about where we are in that market cycle, we have, as you kind of opened up, Mark, given up some of the gains, we're kind of in the teens right now. I think a lot of that also was, traders locking in profits. So it's kind of this idea of like the short-term profit taking, risk off rotation. And, that's not necessarily a bad thing, Mark, because I think what we're experiencing now and kind of going all the way back to, Saylor, is this time really different? I think if you're looking at this pattern of risk on versus risk off, to me, that indicates that Bitcoin is and will continue to be part of any financial plan and strategy, especially
100%. When that's a huge, huge insight, right? That everyone now, and I do mean everyone, like even the biggest doubters, right? The UBSs and the Morgan Stanleys have finally said, fine. Now, maybe not Vanguard, but, because they're like, oh, no, they've made an active decision, which is not, I say this is not an illogical decision. they service old people, right? And why? Well, because old people have all the money. I mean, young people are great and they invent all the new stuff and they are the future. But the facts are they don't have as much money as the old people. And so Vanguard said, we don't want the new people. We don't care. We want to keep the old people. And the old people don't want, they're the get off my lawn people. So by taking that stance against this, everyone says, oh, they're stupid. And I've even tweeted out, the picture of, buy Vanguard, BYE, with the ship going down and the Bitcoin rising. But they don't care. And that's logical in the short run. It's illogical in the long run because at the end of the day, every single one of us, when I say us, I mean the boomers, because I'm my wife and I are the last 2 years of the boomers, so we're the tail end. But every single one of us is going to pass away. And that's part of the human experience. We're going to pass away. And all of this tens of trillions of dollars that we own today and control, and Vanguard has their hooks in, is going to get passed to our kids. Those kids, sorry, Vanguard, sorry, traditional world, they're not going to keep it in TradFi. They're just not. And you've seen me say, I don't have my wallet today, but my granddaughter, right, 3 years old, she's never going to have a leather wallet. Ever. She won't know what paper money is. And that's not good or bad. It's just, that is evolution. And so this idea that we can cling to the old and that the new isn't going to come and displace, it's just kind of silly. Now, if you're trying to maximize your wealth in your finite lifetime, yeah, that's fine. But ultimately, this is a multi-generational transition and, pretty exciting stuff in the sense that this is not only once in a lifetime, not only once in a generation, this is a once in a millennium-ish, maybe even more, maybe multiple millennia innovation, because my little, biological brain can't come up with the next iteration beyond, analog, electronic, digital. There may be something, right? There may be some thing, but I think this is, I believe, right, strongly, that like gold, which was the analog money for the better part of 5,000 years, I mean, money is an asset with the absence of a liability. I just think Bitcoin is that new thing, and that entire systems, new financial systems, will be built on top of it. And, everything from, I was the micropayment stuff, like the idea that I got a check the other day for 31 cents from a company where I own one share of stock because someone gave me one share, the thing where you put it on the wall.
Oh, yeah.
Company has to send me the dividend. Like that's just silly, right? They should be able to make a micropayment into my wallet and it should be invisible.
Well, to your point, Mark, I mean, on this idea of this new kind of payment network, we talk a lot about the alts, and I think I'm probably guilty of this more than you, Mark, and the idea that Bitcoin is more of the digital gold bear asset type of protocol, but we love data and we can change our mind when we have new and better data. So a new report came out and it examined the first half of this year, and there were some interesting trends on what investors were doing, what we were doing ultimately. Bitcoin DeFi, this is also called BTC-Fi because you got to have a fresh acronym, right? So
yeah, fresh acronym.
Right. So these startups in the Bitcoin DeFi space, they raised $175 million across 32 deals in the first half of the year. And so really, what does that look like? You've got many of these deals focusing on custody, consumer apps, and it's a suggestion here that there's more activity happening on Bitcoin, and the idea that investors are pivoting towards usability enter demand-driven products on Bitcoin rather than just infrastructure, which is a big thing that they're saying. They're moving away from just the way I thought about it. And maybe there's this idea that there's something else behind that. And we could point to innovations and things we've mentioned on this show, Mark, like runes, which are enabling tokens on Bitcoin. And that's really converging the things that you're mentioning about how silly it is to get 32 cents in the mail in the TradFi space, but then also using like Bitcoin to accelerate this improved infrastructure and really kind of blurring those lines. Because if you can see where this is going, you can have Bitcoin yield bearing capabilities. And if there's more favorability towards Bitcoin in our financial ecosystem, I think, Mark, maybe it's not next year, maybe it's not the year afterwards, but in 5-10 years time, I can totally see a convergence here. And, maybe the XRP army will be a little bit mad, but they should be happy they're up 400% this year. But Bitcoin and the investors, I thought that was pretty notable. There have been a lot of activity about just on-chain activity in this area.
Look, it is the opportunity when you think about Bitcoin as the base layer, not a thing, not a coin, not a trading widget or, trading sardines or even gold. When you think of it as this ultimate settlement layer for digital things. And I said all the time, like, I own a handful of digital assets that are reasonably valuable. Why are they valuable? Because they're scarce. And what makes anything valuable? It's like someone else might want it because there aren't very many of them. And so I don't want them on a blockchain where what it really is a pointer to a file on an AWS server. Because in that world, AWS could, I'm not saying they will, but they could say, you know what, that's ours. We're confiscating it. We're not letting you get to it. And that seems like a bad trade. And look, in the gaming world, I play a lot of games and I have created, in theory, a lot of value in assets, meaning, if you play something long enough, you accumulate powers or, weapons or whatever, and that has value because you've converted time into these abilities. Well, but I don't own them. And that's a weird dynamic. Now, yes, I could sell my login and give up playing the game and let someone else have those abilities, but I can't sell the sword or I can't sell the Pokemon or whatever. And that is going to change in that things that we want to have title to and ownership of, they won't settle on these other chains where they're owned by Niantic or, Capcom or these big gaming companies or EA. Someone said, this is amazing. Someone said that their NBA 2K career, and I don't play NBA 2K, so I don't know if that's the right word, but their career, they said was worth $400,000.
Whoa. That's maybe more than Jordan had in his rookie year, Mark. You tell me.
I know. And I'm like, whoa. But I guess if you've spent however many hours it takes to get to whatever level they are, and someone could, not have to spend those hours, would they take, because remember, what is money? Money is what you do when you convert energy to value and you get compensated for that value and you spend some of it and everything that's left, you put in this savings, and that is the store of value. It's like a battery, right? Well, that was, I can't corroborate or prove that someone would actually pay $400K for that, but it makes sense to me, right? And, if it's not there, to me, there's just me personally, I like the journey, like just silly thing. So everyone knows I play this game Monster Hunter. And so the new one came out and I played. And so in this, you can get to level 999. And that's like the badge of honor. If you've ground enough, you can be level 999. And so, everyone's like trying to go as fast as they can to get there. And I got to like level 450. So I was almost halfway there. And I just, you know what? I was having fun with the struggle. Like, not being over armored. Like if you're fully armored and you got the big weapon, you can kill something with one. It's not that fun. I kind of like the struggle and the strategy. So I actually started a new character.
Excellent.
And now I'm level 113 or whatever in the new character.
And there's a freedom in that, right, Mark? Because you can kind of change some of the things when you're locked into your skills. It's great because you've achieved sort of a new level, but you can't kind of go and alter your class. But when you're kind of ground zero,
I can't change weapons, and I'm playing a different weapon, and it's kind of fun. And so, but it's interesting in that the digital world should and will allow us, right, the creators of that value, to own that value. And someone would say, well, you're an idiot if you're playing something and you don't own it. But there's value. Look, everyone has their escape. Some people run. Some people, I don't run. Some people, play guitar like you. I'm still trying to play guitar, but and it's so funny. This is really funny. And my wife has banished me to the attic.
oh no.
So no, she's like, I said, do you think I'm that bad? She says, well, it's not that you're that bad. It's just, I don't want to hear the same thing over and over when you're trying to practice or do scales or whatever. And no, you're saying I suck, but okay, I'll go to the attic. And so, I'm a big Kenny Chesney fan. So I learned one of his songs and I can actually play No Shirt, No Shoes, No Service.
Here we go.
It is recognizable. And so I was upstairs practicing, and my mom and dad are staying with us while their house is getting fixed. And long story short, my mom says, who was playing the guitar? Like I was. She's, oh, that actually sounded really good.
All right, Mom.
Only a mother would say that.
I love that.
It actually did sound like music for the first time. All right.
Well, I love that. Mark's mom, if you're listening, awesome shout out. Awesome way that, the role of moms never stop. They just evolve over time. So we'll kind of get into our final segment on the chart of the week, Mark, that kind of brings together some of these ideas that we've been talking about. We've been talking a lot about Bitcoin today because I think that there is a moment that we're all kind of watching to see, what happens. Are we going to hit winter? Or are we going to just kind of establish this new normal? So as we are primed to do in our show, let's look at the data. What does the data tell us in its most, raw fashion? And probably one of the purest ways to do that is to look at mining difficulty. And I thought this was a very interesting chart because it kind of goes into this idea of things like stock to flow, which impact price. And there's all these comparisons to gold. So Mark, I think this is a general chart that can allow us to go nuts for a couple of minutes in kind of thinking about what this may mean. So I will share my screen and let me know when that is visible on your end. And what I will remind our listeners, as always, check us out on YouTube. You guys have continued to make that an awesome place to engage with us on the show. For those that are on audio only, I will describe the chart that you're seeing. We are visualizing, and first of all, one chart crime, the black backgrounds. It's a very big like degen thing, but I just can't really vibe.
No, I'm with you.
Especially you on the blue line, but either way, we'll kind of just make note of that. It's just kind of showing that the difficulty over time, Mark, of mining Bitcoin, and kind of one of the fascinating things that I spend some time thinking about because I just don't 100% fully get it, if I'm being honest. The idea that very difficult math problems can be altered over time and be made more difficult.
I know.
In order to take the computers, could cause them to expend more energy and therefore change the reward structure to create more Bitcoin. So that's a big mouthful to sort of say that it's not the same linear path to mine Bitcoin over time. The protocol itself will change how hard or easy that is to meet certain demand needs. So what this chart is showing, Mark, is that it is as hard as it's ever been to mine Bitcoin. So if you're just, going back to our Raspberry Pi a conversation during the Bitcoin halving last April, it would have been not impossible, but it would have been very difficult to win Bitcoin at that time because it's so competitive and difficult. But this is kind of showing that it could be a drop-off in August. And what that could mean, Mark, is a market reaction. And I think that's the part where you can probably have some discussion, because if it is, more difficult to mine Bitcoin, price goes up, right? And that's kind of what we have been seeing. If it's easier to mine Bitcoin, price can start to go down a little bit. But I'll kind of turn it over to you, Mark, to not take too many of the points, because I think this is an interesting conversation, because we never really spend that much time thinking about like the backbone of this system and kind of why it works to form the market in the first place.
No, it's awesome. And in fact, that video I talked about, they actually described this very well in about 30 seconds, which is again, doing difficult things is ultimately what creating value is all about and always has been. Mining gold was not easy. Drilling for oil, not easy. So the harder something is, the more valuable it is. And what's amazing about this, again, I'm not a statistician, but I took a lot of stats classes in business school. There's a very high correlation between the purpley blue line here and the light white line in the background. There's a huge correlation, like in the 90s. And well, why is that? And this is the price to the difficulty. Mm-hmm. And why is that? Well, it's because of math, and math is nice because it's relatively constant, except I love how you say you can create math problems of increasing difficulty by changing certain parameters and changing requirements. But at the end of the day, and people look at this and say, well, what about that big drop off in June, July? We dropped a bunch of bombs in Iran and blew up some stuff. And people are like, what does that matter? Like, well, there were some miners in Iran that were suddenly offline. And so that's not shocking. And you can look at geopolitical events in all of the drops or the pauses in the trend that, either China banned it or, kicked a bunch of miners out. And if miners go offline, well, then there's fewer people competing, and therefore, the problem has to get a little bit easier. So the more mining capacity, the hash rate, and that's why the hash rate, if we had another chart side by side, the hash rate has made a new all-time high. And everyone tweets out the parabolic one. I'm like, no, it's a chart crime. If it's long-term chart, it's got to be log scale, and then it would look like this. So I keep coming back to the fact that the elegance of the system is that it is designed around math. It is designed around the conversion of energy to value. And that is ultimately what each of us do every single day, right? That's what human existence is. It's about converting energy to value. And some people are really, really good at it. Some people are really efficient. Some have to work really hard at it. But systems that promote progress make those things easier, right? Tools, machines, technology, software. So that growth actually isn't linear, to your point. It is exponential.
Right.
And we've showed that chart in the past where, 100 years ago, we barely had cars. Now we have self-driving cars. I mean, that is an almost an incomprehensible thing. 100 years ago, we barely had air travel, and now we have supersonic, almost, personal portable, drones. So there is this natural accretion of value to innovation and wealth true wealth creation and then here wealth storage in the form of Bitcoin. But I am always struck by the near perfect um, evolution and accumulation of the value according to this networking law, Metcalfe's law, in that, when you add more nodes to the system, it becomes more robust and it becomes more difficult and it becomes more valuable. And people say, well, how do you know that's going to hold? It's like Moore's law, right? In terms of transistors. I mean, humans are going to find way to get more productivity. Once they have a core technology, we can iterate. And it's that, try, fail, try again, try, fail, learn, try again, try, fail, learn. And that's where we are.
So to your point, Mark, this is the hash rate and kind of how exactly as you expect it to look in that same period where you're seeing, some of these changes, leading towards an outcome where the system is designed to operate in 10-minute blocks, right? And if it's noticing that there's a ton of computing power that's come online, it will self-correct itself in order to ensure that people are just not solving all these problems super fast and then minting a lot of Bitcoin that's going to create inflation in the network all of a sudden. So, when you mentioned kind of the momentary flash crash where you had some folks coming offline, the system had to do the opposite of kind of making things a little bit easier in order to ensure that you didn't just have, a crash in Bitcoin and nobody was making enough because there wasn't enough power to solve this complex computer problem. It's really fascinating, and it feels a lot more when folks look at this, and not to get lost in the computer science or the macroeconomics here, to just think that this is way more complex of a system than just putting a finger in the air or getting votes in some sort of voting body in what you think a price of a good should do, or the price of a monetary instrument.
Such an
that's why it's there's value, Mark, in my opinion.
Such an important point, X. Look, most of markets, most of prices as we think about them are exactly as you described. It's finger in the air, two people deciding to trade a small amount, and then the markets affix to that as the value. Well, price and value have very little to do with one another. The price is just what people agree to exchange a small amount of a good or service. Value is very different. And systems that are based on, open outcry, like the old days of markets, or even, the electronic open outcry, which tightens the spread a little bit, but can be manipulated if your machines are faster than others or have better information than others or get access to information before others. Like whoever the trader is that seems to be front running all the Trump announcements. It's just magic how that happens.
Right. What is that?
Information. Just a coincidence. It's a coincidence. But look, ultimately, evolution of technology does follow these consistent patterns, and they are replicable. And they're replicable because they're algorithmic and they are hard-coded, and then they require a meaningful consensus, not just two people deciding. Like, you could say, well, what's the price of, pick a stock, Microsoft? It's X, quoted. Well, if I own some shares of Microsoft, I don't have to abide by that. I could actually sell them to anybody I want for any price I want. I just have to find a willing buyer for my sale. That's not the way algorithmic systems work. And you say, but there's an algorithmic system in trading, financial assets. Well, yeah, there is. There are markets and market makers, and so it does function, but it's not controlled to the same level. And so as we've moved from, said, open outcry systems and bearer asset systems, like think about regional pricing of any good or service, right? You could have babysitting cost one thing in New York City and another in Chapel Hill and another in San Francisco. It's the same relative service. I mean, everyone's kids are more valuable than the other people's kids, but
there's a simple rule to this, Mark. There's a simple fix which we can broadcast to the digital currents audience. Babysitting rates if assuming one child, they should be governed by your age. So if you order 10, that's $10. 15, that's 15, and case solved.
Love it. Love it. Love it.
But I guess, according to this chart, Mark, it's interesting because we expect that the difficulty adjustment will reset tomorrow and it'll be a little bit easier to mine Bitcoin. And just by that logic and not, factoring anything else, that could create increase to Bitcoin price. And that's probably the most common question we get into digital currency. So we'll probably wrap it there with a bit of an optimism to kind of think about Saylor and, what this may mean for us in the long term is that, Bitcoin's future is very much a protocol driven future. And I think that is a very secure place to be. And as always, Mark, we want to remind our listeners to rate, review, and subscribe. Check us out on YouTube for the chart of the week, any chart crimes, and of course, Mark's sock reveal. The fall is among us now, Mark, so we're going to have more Bitcoin Orange, I'm sure.
That's right. Although I think we got one more Indian summer coming next week, and so I'll be back in shorts. But at the end of the day, thanks, X, for leading the conversation, and we'll talk again soon.
Wonderful. Thanks, everybody. And as always, a reminder to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.